Good afternoon to all. First of all, I would like to take this opportunity to thank each and every one of you all to participate in this webinar that is organized by Avyanco. Thank you for making it a success and finding out your time from your busy schedule. The webinar is about the upcoming corporate tax that is going to be introduced in 2023. We want to actually educate, ensuring that everybody is well aware about the ramifications that will be introduced based on the fact that how this corporate tax will have an impact on business setup, on financials, and the various compliances that is expected to come in. So we can, I would again take this opportunity to thank each and every one of you all. With me is Cheryl. She is a company law expert, having about more than 9 years of experience in business setup, defining entry strategies for multinational corporations, SMEs, even mid-sized companies. Her experience has been totally in MENA region, and she is also having good expertise in intellectual property rights as well. Over to you, Cheryl.
Thank you so much, Ravi. Well, Ravi is our tax and finance expert. He's got 10 years experience in the same field. His expertise lies with dealing with multinational companies. His forte is basically to determine tax and finance strategy for the multinational company. Now, before we go through the presentation, please let your question come in. If you have any question, put it in the chat box and we will try to answer these questions as we go along with the presentation or towards the end. Yes, over to you, Ravi. You can start.
Thank you. Thank you so much, Cheryl. So we'll start with the presentation on corporate tax, not taking much of your time. We have created this presentation as a part of a summary. It is giving you a gist about the anticipated corporate tax and what does it mean and what exactly is the scope of this corporate tax, to whom it is applicable, what are the exemptions, any benefits that are there. All of it will be answered in this presentation itself. Starting off with the presentation, we start off with the definition. Now, what exactly is corporate tax? Everybody must be having this confusion that whether it is income tax, whether it is withholding tax, what type of tax is this? Just to make it very plain and simple so that we do not get into the technicals of it, it is a direct tax. It is a form of a tax wherein if there is a business house who's earning profits from doing business, say for example, if Avyanco, as a company, we are a corporate service provider. We are generating revenue. Just to take a hypothetical example, our turnover for the company is about 10 million dirhams. Now, by the end of the year, when we complete our one financial year, we incur a cost of say about 5 million dirhams. Now 5 million happens to be the net profit for the stakeholders. On this particular 5 million that we earn, 9% of corporate tax will be applicable with effect from next year. So it is, to make it very plain and simple, corporate tax is nothing but actually a direct tax on the profits that you realize as a company from the revenue that you earn. It is only on business profits. So to remove the ambiguity, it is not equivalent to how we actually calculate income tax. Corporate tax is a form of a direct tax that is levied on the net income or the profit of any corporation or the entities. Clear with this?
I'm so sorry to interrupt you, Ravi.
You
know, UAE already had VAT, value added tax. So there is a lot of confusion between, you know, what is VAT and what is corporate tax. If you can highlight that also for us.
Absolutely. I'll take an example so that the ambiguity relating to VAT and corporate tax is cleared. I'm sure a lot of our clients or even a lot of associates that we come across, they have a confusion whether what exactly is corporate tax. VAT was already introduced. VAT, say one particular client goes ahead and takes our business setup service. We charge them 10,000 dirhams. Over that 10,000 dirhams, we charge 5% as VAT. Now, if you understand the modality of the transaction, we are actually collecting that particular 500 dirhams from the client itself. We are not paying it from our pocket. We are acting as a collection agent for the government, collecting the VAT from the client because he's the one who's taking our service and accordingly depositing it with the government on a quarterly basis. Whereas in case of corporate tax, that is not the case. In case of corporate tax, the 10,000 that we have collected, that happens to be our income. Of that 5,000, say for example, is our expenditure towards salaries, towards rents and everything. The remainder 5,000 on that 9%, which is roughly approximately 450 dirhams, is something that the company has to pay from its pocket to the government. So this is the major difference between corporate tax and VAT. VAT is an indirect tax, wherein the person, in terms of the company, they do not pay it from their pocket. They collect it from the person who's receiving the service or the goods. Having said that, VAT will always be a form of an indirect tax, wherein the opposite person will just collect it from the receiver and deposit it with the government. But whereas in this case, we have to pay it out from my pocket.
All right.
I hope, yeah. So just to make
I think we don't have.
Yeah, just to make it relatively more simple, there are two different definitions: corporate tax, direct tax, and VAT, indirect tax. VAT will never be a burden on the businessman because it is always he's receiving it from his customer and depositing it with the government, acting as a collection agent. In case of corporate tax, it will hit the capital because you will have to pay it from your pocket. Clear?
Okay. Yes.
Perfect.
So this is right to say now, once corporate tax is going to be implemented, the business houses will be applicable for VAT and for corporate tax, both.
Absolutely. So VAT will be indirect tax that will be continuing to be applicable for all the corporates, whereas in terms of corporate tax, that will also be applicable to all the corporates, but it will be a form of a direct tax.
So we have one more question from the audience. Is corporate tax applicable to all the business houses? I'm sure you're going to answer this question as we go along with the presentation, right?
Yes, absolutely.
Perfect.
So
Then we can move on.
Yeah. So moving on with the presentation. Okay. This is giving a brief idea about when exactly was this corporate tax introduced. So Ministry of Finance holds in terms of the authority, in terms of the administrative powers to actually introduce this corporate tax. Corporate tax was introduced with the objective to make the UAE economy more transparent, more tax compliant, as well as compliant with the relevant company laws and regulations. Now, tax as a particular practice is always healthy for any particular kind of an economy. Having said that, this particular decision was taken by the Ministry of Finance on 31st of January, giving time to all UAE corporate houses, stating that it will be introduced on or after the 1st of June 2023. Bahrain is outside the framework because whenever a tax is introduced back, however, it was introduced in 2017 as well. When VAT was introduced at that time as well, all the GCC nations had unifiedly agreed to introducing VAT. Stating in this particular region, Bahrain has been kept outside the framework of corporate tax as of the moment, but UAE is the second in place to actually introduce this corporate tax after KSA, that is Saudi Arabia. So Saudi Arabia currently does have a corporate tax of 20%, but UAE, being a part of the GCC region, is the second in place to introduce this, but at a nominal rate of 9%.
Okay. Ravi, I also want to ask you because you're a tax expert. I want to know how are the sentiment of the investor. Do you think businesses are going to shift their base from UAE because UAE was known as tax haven? Now tax is going to be implemented. What do you think? How this is going to impact the market?
In regards with the tax that has been introduced, I can assure you that this is a major positive introduction that has been a decision that has been taken by the government. It will be a landscape in terms of wherein all the investors are actually welcoming this particular move from the government. The reason being, even though UAE is a previously was known to be a tax-free zone, which eventually will not be because it will become tax compliant. Majority of the multinational corporations only set up their bases if the economy of the country does have taxes. Now, with taxes come transparency, because it's not just discharging of tax liability of 9%, but also declaring the source of income. So with tax comes dissection of clean money as well as dirty money. Because at the time when there is any kind of a declaration of what is the source of income, automatically the entire money gets channelized in the economy of the system. Having said that, I can assure you that this particular introduction by the government is a very intelligent move to attract more investments from foreign institutional investors, primarily targeting the West, as well as ensuring that multinational corporations set up their base, shift their bases to a much healthy infrastructure, whether be it is real estate wise or with tax compliant wise.
Right. As we move with the presentation, just a reminder to the audience, please keep asking questions. We have already received some questions, and I'm sure as we are going along with the presentation, these questions are going to be answered. If not, then we'll answer the question towards the end as well. Yes, Ravi, you can move on.
Sure. So moving on with the presentation, as I stated that, this is going to be having a very positive impact in terms of to the corporate world. And this will be taken up in a way wherein you will experience a lot of foreign institutional investors setting up their bases. A lot of foreign direct inflow from funds will also be experienced in UAE. Moving on with our presentation. So what exactly has been our analysis? How this entire corporate tax has become actually a particular subject wherein a lot of people have taken interest, because how did the government think of introducing it? So this plan was actually thought about well before in advance, like about 5 years before from now, wherein the entire UAE economy was taking a shift to the compliant zones itself by first introducing VAT back in 2018. However, the framework was decided in 2017. Eventually, introducing ESR, economic substance rules, in 2019, but due to COVID, the reporting for the same got delayed since the pandemic had taken a hit. So the government had extended that benefit. After that, introducing CBCR, which is only applicable to multinational enterprises and corporations who are having their bases across the globe and also in international markets, and now introducing the corporate tax. So the whole objective of the UAE government is to ensure that any kind of revenue that is generated in the economy has to undergo its due process. Once this particular due process is defined, there is a clear dissection of the source of income. The source of income helps us to ensure that there is no kind of tax evasion and the government gets its due in terms of VAT or the corporate tax.
We have a question from the audience right now. Is this 9% flat rate applicable to all businesses? Are there lower threshold for small micro businesses?
So the 9% tax rate is applicable to all businesses who are having a threshold. So in terms of tax, there are two aspects. One is the chargeability, second is the applicability. Applicability defines the scope, stating who all are applicable and falling under the gamut of corporate tax. So all business houses definitely fall under the gamut of corporate tax. In terms of the chargeability, the percentage is 9% once you cross the profit of 375,000 dirhams. To give you a hypothetical example, Avyanco makes a turnover of 500,000 dirhams, and once when its financial year ends, it incurs an expenditure of 125,000 dirhams towards its operational cost like salaries and rent, and the remainder of profit, that is 375,000 dirhams, once when Avyanco realizes 375,000 dirhams as its profit, it is subject to tax.
Also, I want you to highlight and elaborate a little more about ESR, Economic Substance Regulation, and how it is going to is it different to VAT or this particular compliance, how it is going to impact the business houses?
Sure. It is certainly different from VAT. Now, as mentioned, that VAT is a form of an indirect tax. Only the end consumer is actually the person who faces the cost for VAT. So if I'm a business house, I'm giving service to another business house, they can take the credit of the VAT that they paid. But the end consumer will have to bear the cost for it. So VAT is a form of an indirect tax that was introduced long back. In terms of ESR, the whole objective, what exactly is ESR? I can assure you, economic substance rules was the time when it was introduced. At that time itself, most of the finance professionals in the country had made up their mind that tax will certainly come into play. Now, coming into this particular point, what exactly is ESR? Economic substance is nothing but to determine the substance of the transaction. Now, what does substance mean in this? Say if I have a company over here in UAE, it's a service-based company. And I also have a company in the United Kingdom, which is also a service-based company. I have a client in UK who's asking for a business setup or maybe a chartered accountant advice in the United Kingdom itself. I provide the service from UK, but I take the financial transaction in terms of my service fee in the UAE. Usually, most of the business houses used to engage into such type of transactions because UK being a highly taxable zone, they used to end up paying 40% tax over there. To avoid that scenario, they used to receive the financial transaction in the UAE, but they used to continue providing the service back in the UK itself. This particular transaction falls under the ESR category because the financial transaction was received in UAE, but the substance of the transaction was lying in the UK itself. In ESR, there are a list of 9 relevant activities. Now, I will not get into the technicals of it because apparently if we get into the details of it, every particular activity has a chapter. However, those 9 activities, if one particular business house does encounter a transaction like this and there is a foreign currency transaction, then in that case, they are subject to ESR. So unlike VAT does have exemptions in designated zones. ESR does not have any exemptions. ESR is applicable to all companies, whether it is a federal government, whether it is set up by the emirate government, whether it is a free zone entity, whether it is a mainland entity. ESR is applicable to all. You have the person in terms of the professional, he has to determine whether you fall under the category of submitting the notification and the report submission. So that is determined by a qualified chartered accountant once when he undergoes your books of accounts, understanding whether you have encountered any kind of this transaction as I explained earlier, and based on that he will advise you whether you have to submit this notification and also submit the report.
All right, thank you so much. Also, just an add-on question on this: what are the penalties if you do not comply with ESR?
So non-compliance with ESR leads to a penalty of 50,000 dirhams. ESR is an annual activity. Non-compliance with this will lead to a penalty of 50,000 dirhams, which will be issued by the Ministry of Finance.
Okay. We also have one question from the audience. How will the service provided to Bahrain considered under the preview of corporate tax?
So service provided to Bahrain will depend upon the fact whether what type of service are you providing. Because in case of services that are provided from UAE, a country in Bahrain, the point of consumption, in case of services, consumption is the moot point. Where was the service consumed? Now, we also provide services to our clients in UK, but the services are ultimately consumed over here in UAE. So in service, point of consumption is of key importance to determine whether it is applicable to VAT. In terms of corporate tax, it is certainly applicable because at the time when we determine corporate tax, we take the total sales. We do not take taxable sales. We take the total sales to determine the same.
All right. Now, before we move on, let me also remind again, we are receiving a lot of questions. Please let the question come in and we're trying to answer these questions as we are going. And also, we had a question from the audience whether this presentation, whether this webinar is recorded. Yes, it is recorded and it will be in our YouTube channel. And that link will be sent out to you. Yes, Ravi, you can go ahead.
So moving on with the presentation, since now corporate tax, as I mentioned, was introduced, was announced in January 2022, from when will it be applicable? Now, this is a subject matter wherein it needs everyone's attention because even though the applicability year starts from 1st of June 2023, now in case of companies, there is an aspect of a financial year and a fiscal year. Financial year is determined by the company's law and fiscal year is determined by the tax law. Here, the companies will be given one particular benefit that they can adopt a fiscal year based on their particular convenience. Now, this particular statement that has been issued by the government is still tentative. However, as per the law that is there in place, it is going to start from the 1st of June 2023 and first fiscal year will end on 31st May 2024. In taxation, based on the fiscal year, your assessment year is determined. So what is the difference in layman's language? If Avyanco does business from 1st June 2023 to 31st May 2024, that business will become its fiscal year. And the following year will become its assessment year, where the tax authorities will ask for the tax return, asking to declare our total sales, whether taxable or non-taxable, vatable or non-vatable, all our expenses, whether qualified or non-qualified, and accordingly discharge our tax liability by declaring that information in the tax return itself. So having said that, the first tax return filing is likely to be due at the end of 2024. But the applicability will start from 2023 itself.
Okay. So it's right to say that the tax will be implemented by 1st of June 2023, but the reporting will start from 2024.
Absolutely.
Correct.
Absolutely.
So we had a question from the audience. So when is the first year of liability for a corporate tax? Is it 30th June 2024?
It's by the end of 2024. They are likely to announce the dates possibly by the end of this month, but it will be certainly by the end of 2024. So as I mentioned, that the fiscal year of June 2023 to May 2024 will be the period wherein you do your business in compliance with the corporate tax. Like, just to give you an example, like certain expenses will be disqualified. So you have to engage your business in a way which is tax compliant, so that you are able to declare it by the end of 2024 about your revenue, your qualified expenses, and accordingly discharge your tax liability.
I also have one more question from the audience again. How can a company having registered in UAE be ready for corporate tax concerning books of accounts? Can you elaborate that for us?
Sure. So tax is everything in terms of financial compliances is a subject of bookkeeping. How efficient and how compliant your bookkeeping is based on the fact how you will be able to discharge your tax liability. In terms of bookkeeping, as we are talking about the corporate tax webinar today, this entire particular tax laws that have been as a framework that has been decided by the Ministry of Finance is totally dependent upon the fact that how well you are able to manage your books. The books of accounts have to be compliant with IFRS, they have to be compliant with VAT laws, they have to be compliant with the ESR laws. Now here I'm just talking about the local laws, because if you are based in UAE, and accordingly in that particular format, you will be in a position to discharge your tax liability properly at the time when corporate tax is introduced. So maintaining of books of accounts in the most appropriate format, which is beneficial for the shareholder as well as for the, in terms of compliances are concerned, even beneficial for the government, is of key importance to ensure that discharging of tax liability is proper.
All right.
So
Yes.
moving on. Yeah.
Yes, please. We can move on.
Here is the scope of corporate tax. Yeah. So moving on with the presentation for the scope of corporate tax. Now corporate tax has been introduced. Everybody has a fair understanding of the fact that when will it be applicable, what is the rate of corporate tax, but the scope itself determines to whom is it applicable and what type of activities fall under that. Scope is of key importance to understand to whom is it applicable, and even if it is not applicable to certain types of certain exemptions which are given to certain applicants, they have to obtain an exemption certificate in that regard. Now, to start with this, businesses which are operating in the extraction of natural resources, they will continue to be subject to the tax decree issued by the respective emirate. I'm sure most of you all must be aware of the fact that UAE had introduced back in 1970 a corporate tax on extraction of natural resources. Like, this particular activity was always a taxable activity, but it was controlled by the emirate, the respective emirate where the business house had its operation. So it will continue to actually fall under the same gamut. This particular corporate tax will not be applicable to them because they are being taxed under a separate chapter. Having said that, we usually get a lot of inquiries from our clients who are high net worth individuals, who are actually C-suite designation holders, who are working in a company at the top brass management, asking whether their particular income will be taxable in terms of salary. Here, I would like to clear the ambiguity that there is no tax on the salary income that is earned in UAE. Based on the tax framework that has been introduced right now, there will be no taxation on any salary income that is earned in UAE. The reason being because salary is not an income that is earned from a commercial activity. It is a separate head of income. So income generated from doing a commercial activity, primarily profits from business, is only taxable. So anyone who's earning a salary is not subject to any income tax, because that is a separate chapter altogether.
I also want to ask Ravi, because this is a very trending topic in UAE right now about virtual assets. How is it going to implement on cryptocurrency, NFT? Even government has now started the regulatory body called VARA for crypto licenses. How this is going to impact?
Absolutely. So any business house, whether it is a virtual asset business house, whether it is a cryptocurrency trader, or any business house which is actually trading on behalf of its clients, everyone will be subject to tax. Here, the geography has to be determined. Now, if you actually read the scope, it states that mainland businesses will be subject to tax, and UAE will continue to commit its commitment by keeping free trade zones outside the gamut of corporate tax. That is absolutely a fact, that free zones will be outside the gamut of corporate tax, but they are subject to compliances. Now, giving you an example for the question that you raised, Cheryl, if there is a crypto trader who has taken necessary approvals from VARA and has set up a company in a free zone, but since the nature of his business model is not limited to the geography of free zone, his entire income will be subject to tax. So how this entire corporate tax has been introduced, their objective is to state that if I am a free zone company, I have to limit my business within my free zone itself to get the exemption. The moment I cross that particular geography, immediately my entire income will be taxable.
Okay. So we have a question related to this from the audience. We're doing business in mainland. Are most of the business directly is out of scope supply? So basically, I think the audience wants to understand, forming a free zone company will help him save tax.
To answer to this, I will state that we never recommend that you liquidate your mainland company and go ahead with the free zone, because mainland is now subject to tax and free zone is not. We right now recommend that you should have at least two companies, even though if your business is whether limited to domestically mainland or whether it is in free zone. Because here is the question wherein your chartered accountant will actually help you govern you the right advice, stating that what type of particular invoice should be billed from which particular company to get the proper tax optimal solution. Now, as question has been raised in the from the audience that the entire supply is out of scope, in that particular case, we will have to understand the nature of your business model, and based on that, the most optimum advice we can actually provide you. Stating, however, to give the most right advice right now to all types of companies that are operating, we always recommend them to have two companies, one in mainland and one in free zone. And accordingly, the type of transaction that they engage into, the billing will be necessitated, stating that this particular bill has to be done in mainland or this particular bill has to be raised from the free zone.
All right. Before you move on, Ravi, once again, we are receiving a lot of questions, and I think we've answered most of the question as well. And as we are going along with the presentation, we'll try to answer during the presentation or towards the end. So let your question flow in. Yes, Ravi, I think we can move on.
Perfect. So as stated, that free zones as of the moment would be completely outside the gamut of corporate tax. Mainland will be subject to tax, but certainly there are a lot of benefits that are there in mainland as well as in free zone, because free zones, if they're given this blanket exemption, it comes at the cost of compliance. So blanket exemption is not suo motu taken. It is based on the fact that you obtain an exemption certificate by following all the compliances, getting your books of accounts audited, and also ensuring to obtain the exemption certificate. So moving on with the presentation. Yeah. So yes, here is the rates. In terms of, now we understood that when will it be introduced, to whom is it applicable, the scope, the legal structure in terms of whether mainland is subject to tax or free zone. Now, what is the rate, which we had discussed previously? I think at the start of the webinar itself, there was a query asking about the threshold. So as I had mentioned at that time, in taxes, there are two aspects, chargeability and applicability. Applicability, now we understood that, okay, if we are a company who has a base in mainland, we are doing business, after our expenses, there will be taxation will be there on our profits. But when the tax has to be discharged, That is the question. And what is the amount that has to be discharged? So the rate is 9%. That is point A. And the threshold is 375,000. So in VAT, we had to reach a turnover of 375,000. So once when your business reaches that turnover, you become subject to tax. However, in case of corporate tax, your profit has to be 375,000. Once, if your profit falls below 375,000 dirhams, you need not discharge any tax liability. However, you have to file the return stating that you need not be paying any tax because your profits are less than 375,000 dirhams. So 375,000 dirhams of profit acts as the threshold for this particular corporate tax.
All right. Also, just want you to clarify, in VAT, we have a voluntary choice if we reach the threshold of 187.
Yes.
Right. So very something similar to corporate tax as well, or it is only going to be about 375.
So in VAT, it is subject to the turnover of the company. That because of which the government has extended the voluntary mechanism scheme to support small and medium enterprises so that they are in a position to obtain the VAT TRN number, because market practices as such that business houses want to engage with registered service providers or registered traders. In that particular case, that's a completely separate chapter wherein they give that benefit to voluntarily to small and medium enterprises. Over here, there is no such voluntary registration. Registration is dependent upon the fact that the moment your profit reaches 375,000, you have to register. However, if it falls below that, you have to file the return, but you need not discharge any tax liability.
I have one question from the audience. Would corporate tax be applied on revenues from international transaction and clients?
Yes. So at the time when we determine the total sales, it will be taken as taxable as well as non-taxable sales. However, based on your business model, if it is completely exempted as your business model is, and it falls under the exemption category, then that revenue will not be taken into the total sales category. So in corporate tax, there are chapters wherein they are determining what type of revenue will be exempted and considered outside the gamut of corporate tax. Whereas in terms of other revenue, which might not be chargeable to VAT, but is certainly chargeable to corporate tax. So to answer your question, if your particular business model falls under the category of the exemption, the chapter that is determined by the framework, then you need not be considering that income to discharge your tax liability. However, if it falls under the category of acting as a qualified revenue, even though you must not be discharging VAT because it must be falling under the export category, you will still have to discharge corporate tax. So it depends upon the type of business that you have engaged into.
So it's right to say, obviously, it's 9% corporate tax. It is going to be implemented for all the business, whether mainland or free zone, but it is depending where the transaction is actually happening. Correct?
Absolutely. Absolutely.
So if the transaction is within the country, you are applicable for 9%. Anything happening outside UAE, it's on 0%, if I can say that.
Yeah, that is based on the fact that how we determine the VAT amount. But VAT amount is completely, as I mentioned, VAT will be indirect. This is direct. So you must be exempted from VAT, but you might be subject to corporate tax if your nature of business does not fall under the exemption category.
And we also have one more question just came in right now. What are expenses can be deducted? Is there any threshold for expenses?
To answer this, there is no threshold that is determined by the government stating that only there will be a cap limit in terms of allowing an expenditure. However, there is a concept in the corporate tax called as qualified expenses and non-qualified expenses. Now, just to give you a small example, if I'm a mainland company, I'm engaging into a transaction with a free zone company. Now, this particular type of transaction is disqualified. So even though you must be incurring a transaction stating that you must have taken a service providing, like say you must have hired one IT service provider from a free zone company. He must have actually overhauled the entire IT system in your company, and you have a company in your mainland base. This particular expenditure that you incurred, even though it was a genuine expenditure, will be disallowed. Now, this is subject to conditions. Again, based on the type of business model. If your business falls under the exemption category, you will be given this benefit. If your business does not fall under the exemption category, certainly this expenditure is disallowed.
Also, Ravi, if you can tell me, what about export businesses?
So export businesses, in terms of exports, they are absolutely outside the gamut of corporate, outside the gamut of VAT, wherein 0% is charged in terms of the entire transaction. So if I'm a trader who's exporting goods, I need not discharge any VAT liability. However, that will be considered as a part of total sales. Now, this is non-taxable sales. Again, if you fall under the exemption, so there is a list of an exemption category, the type of businesses which the government has considered it to be specified. These specified industries will be given that particular benefit, stating that your non-taxable sales will not be considered, whereas rest of the businesses will have to take this into account in terms of discharging their corporate tax liability.
Right. Okay, I think we can move on.
So moving on with the presentation, here we have determined the exempt income. What types of incomes are exempt for a business house? So as a business house, there are multiple types of revenue that a business house earns apart from the primary activity that it is engaged into. If the business house has made any kind of investments in another company and earning a dividend, that will be outside the gamut of corporate tax. Any capital gains, say for example, if a business house has bought a property, whether it is a commercial property or a real estate property, in that particular case, any kind of profits in terms of capital gains it earns from selling of that property will be outside the gamut of corporate tax. Intra-group transactions, if there is a company which has multiple organizations dealing with each other, these profits will also be outside the gamut of corporate tax. However, here one has to understand, now as I mentioned about property investment, so if Avyanco makes an investment by buying a commercial property and it sells later on, that will be outside the gamut of corporate tax. But that does not apply to developers, because for developers it is not a capital asset, it is their inventory. So having said that, as I've been rightly mentioning, that nature of business is of key concern, wherein one has to explain its business model to a qualified chartered accountant to understand the tax implications and the ramifications on its business.
Just a question, Ravi, here. Again, let's say if I have set up a company in free zone, all right, and I have opened a branch of the free zone company in mainland. Will my mainland company still be entitled for corporate tax?
So for free zones, as I mentioned, that they have to work within the geography of free zones or do business outside UAE. If they engage into any kind of a domestic transaction by setting up a branch, or even with one transaction with a mainland company, their entire income becomes taxable.
All right. I think, yes, we can move on. Just before you move on with the presentation, we are receiving a lot of questions. We're trying to answer it as we are in the presentation. If some questions are not answered, we will try to answer it towards the end of the presentation.
So having said that, profits from intra-group transactions will also be outside the gamut of corporate tax. No withholding tax on domestic or cross-border payments. That is actually a major relief, because withholding taxes, which eventually is anticipated to come in, will also be a part of the corporate tax framework. Now moving on with the presentation. Free zones. Yes. So as stated earlier, the UAE intends to honor its commitment to business houses who are registered in free zones. To the extent that such business do not conduct any business with mainland, they shall be subject to 0% tax, or may be exempt as the case may be. So there are a lot of terms and conditions to get this particular benefit. In this particular case, the tax holiday period will be enjoyed by all the free zone companies who are having their base over there. However, every transaction that they engage into, they have to be relatively too careful at the time of their fiscal year, that they do not engage into a transaction which disqualifies them from this particular benefit. Now, benefit in tax framework comes with compliances. Benefit is not automatically derived into. It comes with tax. It comes with certain compliances wherein you have to get your books of accounts audited. You have to create books of accounts at the first place, get it audited, be compliant to VAT, be compliant to ESR, and then you can enjoy the benefit of this exemption. So businesses with having presence in both mainland and free zone, as well as those operating under the dual license scheme, should consider their impact on their operating model.
So, as you rightly said, free zone, based on how the transaction is happening, they will be entitled. But what is the protocol a free zone company has to follow in order to justify to the government that they are not under corporate tax, they don't entitle for corporate tax?
Yes. So to get that benefit, one has to create its books of accounts, like manage its books of accounts properly, file VAT returns if applicable based on their business model, submit ESR reports to the authority, and get its books of accounts audited by a listed auditor, and also file an annual CT return, that is a corporate tax return, declaring that we have complied with all the regulations that are defined for the free zone, and based on this we are submitting a nil return. So there is a concept, so as mentioned, that free zones are outside the gamut of corporate tax. That means that they need not pay taxes, but they have to certainly file annual corporate tax returns, but that will be a nil return, uploading documents stating that they have complied with all the particular compliances that are there in place, including the anti-money laundering compliances. And based on this particular compliance, they will be given the benefit of the exemption.
So I'm just trying to understand, and in the favor of the audience as well, since it's a free zone company, then why do they need to, submit their annual tax filing, return filing, basically?
Yes. So in tax framework, to get the benefit in terms of not paying taxes or not discharging liabilities, we have to earn that particular credibility before the authority. So how to earn that credibility is based on the framework that they have defined, stating that you have to be tax compliant. You can continue not discharging payment or not discharging any liability to the government, but you have to justify before the government by filing a return that you have complied with the other compliances. So once you submit those details to the government, only then the government will entitle you for the exemption. So it is earning the exemptions rather than being automatically applicable for it.
So it's right to say that, from 2023, all the companies need to submit their audit report to the license issuing authority?
100%.
All right. And what are the penalties? Because I have a question from the audience as well. The penalties if we do not submit the audit report.
So the penalties for not submitting the audit report are from different authorities in terms of different laws that are there in the framework. One is, in case if you do not submit your audit report as per the commercial company laws, this is I'm talking about the mainland companies, the penalties start from 50,000 dirhams. Second, even though you do not require right now to submit it to the economic department, but you are still required to get your books of accounts audited. Because if you read your memorandum of association, there's a time limit, there's a time framework that is given in your memorandum, asking you to get your books of accounts audited on an annual basis. So if there is an inspection from the economic department, you certainly are liable to penalty. Second, if you are not submitting your audit reports to the free zone authorities, depending upon the type of the respective free zone, the penalties vary. They start from 20,000 dirhams, it shoots up to 100,000 dirhams, even in a free zone like DMCC. Now, having said that, as far as penalties for not submitting your audit report in the corporate tax framework is concerned, they have still not come out with the penalties chapter. But I can assure you, with the range that they have mentioned, there is certainly penalties that are going to start from 50,000 and it shoots up to 500,000 dirhams as well.
We have a question from the audience, Ravi. If the company is operating for the last 2 years, is it mandatory for them to get their accounts audited before corporate tax?
So it is mandatory for all companies in UAE, whether mainland or free zone, to actually get their books of accounts audited on an annual basis. The challenge is that as of the moment, at the time when we go ahead and renew a trade license, the license issuing authority does not make it a mandate for you to submit your audit report, but it has made it mandatory in your memorandum to get your books of accounts audited on an annual basis. So having said that, now since corporate tax is going to come in, audit is certainly going to be mandatory, because how otherwise will one actually determine what type of expenses are qualified, what type of expenses are disqualified, what type of exemptions are there for the free zones? It is most certainly advisable for you to actually get your books of accounts first prepared in compliance with the framework, and second, get your books of accounts audited. In fact, even obtain an opinion that what will be the most suitable, most tax optimal solution for you, so that you reduce your tax liability based on your business model.
Can we highlight few solutions in this webinar in order to save corporate tax?
Yes. So it depends upon the type of business model, as I stated, because the qualified expenditure and disqualified expenditure is a separate chapter wherein every particular business house, their chapter has been determined. Once when this particular business, now just to give you an example, if I tell you, most of the business houses will make sure that they engage into transactions within their zone, within their geography itself, so that their expenditure does not get disqualified, because this will become a major capital outlay for business houses wherein they engage into an expenditure, but that expenditure is disallowed by the authority. So this is actually a double hit wherein their particular expenditure was still incurred, but it was not considered to be a qualified expenditure by the authority, because of which they had to pay taxes on a higher income. So depending upon the type of business, I would always recommend the business house to reach out to their chartered accountant, to reach out to a qualified tax professional. Once they are able to explain their business model to them, accordingly they'll be well in position to determine what type of expenditure will be most suitable for them and how they can reduce the tax liability on it.
I also want to ask you one more thing, in favor of the audience. When we are talking about free zone, I'm sure most of them know free zone is for somebody who's going to work within the free zone, operate within the free zone or outside UAE. In this case, will corporate tax be implemented for somebody who's, working within that particular free zone?
So corporate tax will certainly be applicable to all free zone companies, but it will not be payable. So 9% will not be an amount that will be payable by the free zone company, because they will be submitting their annual returns, declaring that their income is earned from within the free zone or outside the free zone, but not from mainland. And based on this particular aspect, they will submit details stating that they are tax compliant by sharing their VAT details if it is applicable to them, sharing their ESR details, and submitting their audit report in the annual CT.
And can you also just add on what are the compliance a business house is obligated as a stakeholder to follow in UAE? Yes, we know corporate tax, ESR is also what we've discussed. Apart from that, is there any other obligation that a stakeholder has?
So it depends upon the different types of laws that are there in place, starting from the compliance given by the economic department in terms of the trade license renewal, going ahead with the immigration laws in terms of how many visas the company has. Third is towards the financial and tax compliances, starting from VAT, ESR, anti-money laundering compliances, external auditing, mandatory external audit, and plus leaving this aside, any immigration laws that are there in place. So as a company, one has to actually comply with all the laws, type of business that they're into. If as a company we set up our own business, we have to comply with the economic department laws in terms of having our own post PO box, or in terms of doing the trade license renewal on time, in terms of having an immigration law, how many visas would be applicable to, and duly adhering to the immigration and the visa laws as well. Leaving that thing aside, going ahead with the financial and tax laws, as we mentioned, VAT, ESR, AML, and audit. So all these particular compliances will be a part of which a corporate house will certainly have to adhere to.
Right. Yes, I think we can move on with the presentation. And I will probably, highlight the questions as we have from the audience.
Sure. So moving on with the presentation. Yeah. The next slide talks about transfer pricing. Now, transfer pricing, we will actually have a separate webinar for this, because transfer pricing itself is a very comprehensive subject, but it is applicable to business houses who are having multiple business units across the globe, and they are engaging into transactions. To give you an example, if I am an IT service based company and I have my IT service center in another country, and we both engage into commercial transactions, transfer pricing rules will come into play. Transfer pricing talks about what is the type of transaction that you have engaged into, the arm's length price, whether the transaction was done within the jurisdiction of the arm's length price determined by the commercial laws, and also whether it will be a qualified expenditure or not. So this is a game changer for intercompany transactions. They have to undertake this particular assessment, only applicable for those business houses who have multiple business units across the globe.
Yes, I think Ravi, we can, because this subject is very comprehensive, we can probably have another session specifically for this subject. I have one question for you, Ravi, from the audience. do I have to pay corporate tax in installment, or it's one has to do it on a after every fiscal year?
So corporate tax liability will be discharged once in a year. It is an annual payment. It is not as VAT on a quarterly basis. It will be discharged at the end of the fiscal year. Once when you complete a fiscal year, after that starts the assessment year. At the end of the assessment year is where you have to actually discharge your tax liability. So you have 1 year to be tax compliant, the other assessment year to ensure that your auditor or your chartered accountant is ensuring that your books of accounts are in within the framework that is required by the tax authorities. So it is not allowed in installments. To answer your question, it will be once in a year on an annual basis.
All right. Yes, we can move on.
Okay. So moving on with the presentation after transfer pricing. So we receive a lot of queries from our existing clients as well as other clients who speak about the fact that what type of losses be allowed, because there are business houses in a business you actually everybody does business for profit. The law of prudence is there, but definitely in terms of losses, if a business house does incur losses in one particular financial year, it is entitled to claim it as a set off. It can offset those particular losses on future taxable profits. Now, this is again the eligibility. How to determine whether your business has incurred losses is to get your books of accounts audited from a listed auditor. So once you get your books of accounts audited from a listed auditor wherein you declare losses, the next following financial year, if your business is into profits, you can offset those qualified losses and pay tax liability on the remainder amount.
We have a question from the audience. Is there any tax impact on an individual who trades as a sole trader? For example, rendering consultancy services to both individuals and corporates and getting paid in his or her personal capacity.
To answer to that question, I will say that, to engage into any kind of a commercial transaction, any commercial activity, you need to first have a license. Once you have a license, then automatically the entire revenue that you earn in your, whether in personal capacity as a sole establishment or in a personal capacity, even as a rendering a corporate advice to any corporates or individuals, will be taxable. In this case, if you do not have a license and you are still rendering these advices, you might be subject to penalties from the economic department, because you need to have a license to engage into any kind of a commercial transaction at the time when your objective is to earn profits. So if you are a sole establishment, you are rendering services in your personal capacity, whether to a corporate or an individual, you are applicable to VAT as well as to corporate tax.
Yes, I think we are still receiving a lot of questions. We are trying to answer them, but don't stop your questions. This is for the audience. And if there are any questions which are not answered, we'll try to answer it towards the end. Ravi, you can.
So moving on with the presentation, losses, we've explained that they are allowed to be offset in future taxable profits. Groups. Now the next chapter is groups. What exactly is groups? Tax grouping and group relief provisions are allowed. Now, what does this mean? The same particular benefit is given in VAT as well, wherein if one particular business house has multiple units, they are allowed to have a single registration number and they are allowed to file one single return. This helps people to actually set off their losses within the companies and accordingly submit one tax particular return, annual return to the government, so that they are not within the hassle of submitting multiple returns for separate units. So tax grouping in terms of corporate tax is concerned, it is the same benefit in VAT as well, wherein grouping will be allowed. You will be allowed one unified number for the entire group, and you can submit one annual return declaring all your sales and your expenses and accordingly discharging your profit liability.
So Ravi, can we combine the unified number for VAT that we get with corporate tax? Is that possible?
So as of the moment, registration for corporate tax has not begun in terms of how do we determine. Right now, the unique number that is there is the VAT TRN number. The government will certainly keep that particular number as unique, or even if it plans to introduce in terms of the administrative station level, at that time, it will give you a unique code, how the TRN code is there. So as mentioned, VAT is in the form of an indirect tax. That will be separate chapter because it is governed by the Federal Tax Authority. Corporate tax also governed by Federal Tax Authority, but it's a completely separate chapter because it's a form of a direct tax. So there can be a possibility of having a unique registration once when they start the registration process for corporate tax, or it can be clubbed with the VAT TRN number itself, wherein a separate portal will be assigned for the corporate tax members, and accordingly you will have to mention your TRN number and discharge your tax liability there.
All right. I think, yes, we can move on.
So moving on with the presentation after the groups. Yes, this is a very, very important subject. However, as mentioned, that it's as comprehensive as, I would say, as transfer pricing, that is foreign tax credits, because this goes hand in hand with transfer pricing itself. There are entities who will have their base in multiple jurisdictions, like how it is there for transfer pricing as well. So they would fall under different tax jurisdictions. Now, most of the business houses, they actually have a query understanding whether if they are discharging their tax liability in their home country or in a different jurisdiction, will they be allowed to discharge that tax, like take a set off in terms of the taxes that they have paid in the tax payment that they will be making to the UAE government. Certainly, you are allowed and you are eligible to take that credit. But again, depending upon the fact whether the government has that double taxation avoidance agreement with that country, and also you are also compliant with transfer pricing laws. Leaving that aside, once when these two particular things are determined, only then you will be entitled to take this tax credit. So to answer this question, if Avyanco has a business over here in UAE now, which is going to get tax compliant next year, does also have a business in the United Kingdom, and Avyanco has discharged its tax liability over there, it is allowed to take a set off subject to conditions of the double taxation avoidance agreement.
And I think we have around 180 countries in the list for the double taxation avoidance treaty.
Absolutely. Absolutely.
All right. We have one question from the audience, but I think this was answered previously. Is corporate tax applicable on profit more than 375 or the whole profit amount? For example, if my net profit is 376, is corporate tax applicable for only the difference, that is the 1,000 dirhams, or for the whole?
It is applicable for the entire amount. So how does it work? I'll explain. There is the slab rate. This mechanism works in the slab rate, wherein there are slabs that are determined. Since now there is no slab rate that is determined, it is right to assume that the tax rate will be on the entire amount. Because if there was slab rates, then you take the benefit of the range method. Say, for example, if the government would have defined a slab rate saying that from 0 to 375,000, 0%, from 375 to 500,000, 10%. So at that time, you can take that reduction. Otherwise, you can't.
Right. I think for now, we don't have any question related to this topic. I think we can move on.
Yeah. So moving on with the presentation. Yes. So we've reached the end of the presentation. That was the last chapter, that was foreign tax credits.
Yes.
Having said that, yeah. So we are open to queries and any kind of questions that the audience has. I hope this webinar must have given at least a short summary, because the whole objective of this webinar was to give a short summary about what corporate tax is going to come in next year and how is it going to actually impact your business in terms of what ramifications will actually you will experience as a businessman, and what type of activities you need to engage into in terms of compliances to reduce your tax liability and go for an optimal tax solution. So yes, over to you, Cheryl.
Ravi, we just have few questions that has just come in. The first question here is, generally, when a country applies tax, people receive some kind of benefit out of it, such as health benefit, education, or in some other way. What are the benefits we get, especially we are not being permanent residents of the country?
To answer to this question, ma'am, I would say the benefits are already derived in terms of discharging your tax liability is concerned. So as far as the immigration laws are concerned in UAE, we all must have observed that the UAE government has actually relaxed its immigration norms in terms of getting your visa or in terms of getting golden visa, green visa. So they want people to actually be permanent residents over here, which was not the case previously, because at that time you required a sponsor. Right now, the concept of self-sponsorship is there. The
Correct.
concept of 100% ownership is there, wherein previously it was not, wherein 5149 concept was there. So the benefits are already derived in terms of the health infrastructure, even though we were previously not paying taxes. But as far as health infrastructure for the government is concerned, UAE has one of the best health infrastructures in the world, wherein with a meager amount of a nominal amount of an insurance payment, you can experience world-class health facilities. In terms of infrastructure and any kind of real estate is concerned, we experience the best of the infrastructure in the real estate in the world in the UAE. So as far as the benefits are concerned, if you actually check in other taxable countries, they require you to first pay taxes and then get the benefits. Over here, you are already deriving the benefits, because that is the whole objective, that corporate tax is a benefit that will be extended to corporates and will make sure that they come under the global radar, wherein they will be more compliant and there will be more foreign influx of funds. So as mentioned earlier at the start of the presentation, that with tax comes transparency. Like, what is the source of income? Based on this, only multinational corporations plan to set up their base. So having said that, I would say in any country, even whether it is the first world countries, they first require you to make tax payments, then they allow you and entail you for a citizenship. Over here, you are, as it is a permanent resident, based on the fact that how relaxed they have actually made the visa norms.
Yes. Other question for you. Has the period followed currently is Jan to December in UAE? Will the period change for maintaining books of account and for VAT as well?
Yes. So there is a lot of ambiguity with in terms of the financial year. Even in any other taxable country, if you see, there are three types of fiscal years that is being adopted. One, that is required by the company's law, which is mentioned in the memorandum of association, and second, which is the tax year. In this particular case, your tax, you are free to determine your fiscal year. This is one privilege which I would say that you should actually reach out to your chartered accountant to take an opinion on how to manage your capital, because based on the type of your business, you will experience season and off season during a particular period. In that particular case, when you are required to discharge your tax liability, will depend upon the fact what type of business you have engaged into. To answer to this question in the layman's language, there will be a year that will be determined in the memorandum of association, which will be from Jan to December. The fiscal year will be from June to May. However, you will be at the privilege to define your own fiscal year, and accordingly, that declaration will be given to the government.
We have a question from the audience. They have not registered for VAT on the due date, and because of which they've got a penalty of 20,000. How can Avyanco help?
We always recommend to all our clients or to the audience in general, I would also like pass on this message, to actually go ahead with VAT registration under the voluntary mechanism. It is a very, very healthy practice. What the whole objective of introducing taxes are to be more compliant, more, and to obtain benefits in terms of benefits from the banks. Tomorrow, if you're a tax compliant company, you are entitled for credit financing from banks. You're entitled for golden visa if you cross a particular limit. Having said that, now since since now this particular person has incurred a fine from the Federal Tax Authority, Avyanco can certainly help in terms of filing a condonation. Now, this condonation depends upon the fact that how long was the delay. Based on that particular fact, we will submit a condonation letter that starts from reconsideration, by submitting a reconsideration to the authority stating that they need to reconsider their penalty. I can assure you, if this particular assignment is given to Avyanco, we can help you reduce down your tax penalty by about at least 50%. However, there will certainly be some amount that will have to be discharged to the authority.
I think, Ravi, just to add on this, I think we've done it previously for a few of our clients as well, and we were successful at it, right?
Absolutely. Absolutely.
I have one more question very similar to this. How Avyanco will help me with bookkeeping assignments so that my accounting tasks can be aligned with the relevant law and to avoid any future litigation?
So, Avyanco is a registered tax practitioner, a bookkeeper, as well as an auditor. So, We have a team of qualified chartered accountants from England and Wales who follow the framework of IFRS. Having said that, a team of experts will be assigned to you for your bookkeeping assignment. They'll help you keep your books of accounts in compliance with the VAT laws, in compliance with the anti-money laundering laws, in compliance with the ESR laws, and accordingly, based on that, since your books of accounts will be maintained properly, you will be well in position to discharge your tax liability annually at the time when the corporate tax is declared. So this particular, having said that, I would say in terms of bookkeeping management, we have a team of experts who manage your books of accounts, and you will be in access of your books of accounts virtually, because we do not withhold the system. The system will always be in your hands, in your mobile phone itself.
Thank you. I think these are the questions we had. I hope this presentation was very helpful. Just a reminder again, we have recorded this session and this is going to be uploaded on our YouTube channel. So stay in tune with Avyanco. Please follow the social media page that we have. Follow us on YouTube, follow us on LinkedIn, follow us on Insta and Facebook. We will keep updating any latest information or anything that comes up from the government on corporate tax. It will be updated as well. Also, if you are already a client with us, you will be receiving newsletter monthly. And this is a new drive that we've taken. Every quarterly, we are going to have a webinar on a very hot topic. All right, so stay tuned on that as well. And if you have any additional question, please feel free to connect with us on the email that you see on the screen. You can call us, or if you're already connected with our consultant, please get in touch and try to schedule a meeting, and then we can have a one-to-one session on this. Anything else that you want to add, Ravi?
So that's about all, Cheryl. I would again like to thank our audience for participating in this webinar and making it a success. Thank you once again from taking time from a busy schedule and participating in this webinar. I hope we were able to answer most of your queries. And if there is still some ambiguity left, as Cheryl rightly mentioned, you feel free to reach out to us at our defined email address that is mentioned, and we'll be happy to help you.
Thank you.
Thank you.